Let's welcome in Kevin Green, senior markets correspondent, to help set up some of the other action today. KG, I know you're on top of HPQ. Let's start out there. Got a little bit of pressure on there. They mentioned tariffs. What are your takeaways?
Yeah, we're seeing the shares down about 2.75% in the pre-market here. When you're kind of looking at the report, I would say it's a little bit mixed when it comes to not only what they provided for the current quarter, but their guidance moving forward. We actually did see revenue at $13.5 billion. Street was looking at $13.36 billion. And the adjusted earnings per share came in at around 74 cents. Street was looking for 74 cents. So they met that expectations, but their guidance moving forward, the range for Q2 adjusted earnings per share, they're looking for the low end at around 75 cents, the high end at 85 cents. Street was looking for 86 cents. And you can see the same type of theme when it comes to the revenue kind of moving forward as well. Now, one of the things they obviously kind of talked about here is going to be the supply chain and the potential impacts when it comes to supply for the components for their products. And so that might be a little bit of a headwind. And another reason why we might be seeing obviously their guidance coming in a little bit light here. Commercial PC revenue did increase by 10% on a year-over-year basis, and they do see a recovery when it comes to PC demand just in general because of the refresh cycle for Windows 10 end of support. So overall, once again, kind of a mixed report. Really don't like to see the macro headwinds kind of hitting the stock, and that's why we're seeing a 2.75% move to the downside, which is not a major move. It's below the market expected move for this name.
Yeah, it's not a major move, especially given where it has been year to date. I mean, it would take it essentially flat year to date. Does it make sense in the context of these results to you, KG?
Yeah, it does make sense. Once again, I mean, this is going to be a player, especially on the PC side of the equation, and that's been pretty much in recessionary levels for about a year and a half or so. And maybe we are seeing some bright signs. Maybe the AI cycle is going to also kind of put in a little bit of a bid when it comes to demand. But until we actually see that, I think it's going to be very hard for a lot of these companies to try to see meaningful moves in stock appreciation because the fundamentals just are really not, backing that up.
All right. Speaking of, though, a stock making a bigger move to the downside today, you got NetApp shares skidding in the pre-market off the back of their latest quarterly results. Take us through the numbers, KG.
Yeah, so for NetApp, we did actually see a miss when it came to the top line. That came in at $1.64 billion. Street was looking for $1.69 billion. But you did see a meet when it came to the adjusted earnings per share, approximately around the meet, $1.91, for the most part in line with the Street's expectations here. The problem that you actually have with this company is going to be the gross margins. If you're looking at it on a product standpoint, the non-GAAP gross margins came in at 56.7%. Street was looking for 59.5%. And on the services side, it was actually a little bit better when it came to the gross margins reported for the quarter, 82.8%. Street was looking for around 82.2%. But once again, their guidance came up a little bit short. And unfortunately, they are doing some internal restructuring, and that does appear that that's going to hit the margin base for them, not only just for a quarter, but maybe a couple of quarters. And the market really does not like to see that. We might be also seeing a little bit of increased competition and the fact that NetApp might be losing a little bit of market share. So the shares are down around 13%. Even though the performance when it comes to the geographic regions, every single one of them came in line with estimates, the revenue side of the equation just, once again, kind of missed.
And then, KG, when you think about the setup for today and the risk-off tone that we had yesterday, how much does PCE matter?
I think it's the make or break for this market. Luckily, when you're kind of looking at the estimates right now for headline and also for core, you're looking for a month-over-month increase of around 0.3%. If we're able to meet those expectations, I think the market's going to be okay with that. Knowing the components that were in PPI, which was actually fairly hot, there's around 4 or 5 of them that actually go into PCE, and 4 out of the 5 were actually deflators. So that's actually a pretty decent thing. Now, you are actually expected to see year-over-year prints for not only headline, but also core coming in lower. And if we get a better than expected print for PCE, once again, I think that's going to be a market mover to the upside for the equity markets. If it does come in hot for whatever reason, unfortunately, though, that kind of brings some risk. Additional risk to the downside. And then also if NVIDIA is still not able to catch a bid, which it's down this morning, that could also put pressure on the broader equity market as a whole.
Given that we're at 5861 on the S&P 500, what level matters in terms of the direction today on both the downside for support and resistance?
Yeah, so look, bears definitely are kind of in control here right now, but we are at a critical area when you're looking at the S&P 500. To the downside today, I'm looking at 57.35. You are seeing some early flows there, and then to the upside, 59.30. So a pretty wide range. Expect some volatility. VIX is actually still elevated above that 20 level, and you're looking at the VIX futures also increasing as well. So you're starting to see a little bit more of a pricing in of volatility across the curve rather than this near-term backwardation that we've been focusing on for the last couple of days. Once again, I feel like this is kind of one of those make or break levels. Doesn't mean that it's going to be make or break for today, but we have to kind of maintain around where we currently are at for the S&P 500 and not make a new low on a relative basis, because that's where you can see some things kind of unravel even more.
All right, we're at 58.61 on the S&P 500 today. KG watching 57.35 to the downside, 59.30 to the upside. Thanks a ton, Kevin.